The role of MSMEs in India cannot be overstated. In fact, for a sector that contributes nearly a third to the GDP, the attention that the sector receives is highly underwhelming. So, in this third season of Business Insider India's MSME Exchange, we are putting the spotlight on India's MSMEs. And today, as a part of this virtual summit, we are talking about finance, the models of financing, and the change in landscape of finance with fintech leaders. So today, please welcome Mr. Kishore Kharat, the former MD and CEO at Indian Bank and IDPI Bank. Mr. Kharat, thank you so much for joining us here today.
My pleasure.
Please also join me in welcoming Jinand Shah, the MD of Online PSB Banks. Hi, Jinand. Thanks for joining in.
It's our pleasure. Thank you.
And we have Vipul Sharma, the founder and CEO of Checkbook. Hi, Vipul.
Hi. Nice to be on the platform.
Well, I'm particularly thrilled that we have a great composition of both legacy and new age financing leaders coming together to provide a complete holistic perspective. And let me begin by talking to you about one of the bigger issues that is often discussed, and that is credit penetration for MSMEs. It was a challenge and it has vastly improved, and fintech players are taking the credit for taking great strides here. I want to draw Mr. Kharat into the discussion. How do you see the change in penetration of credit in the recent past?
Thank you. In fact, we must look at these MSMEs and how it has been performed. Right from the independence of our country, as you rightly said, MSME is a great contributor to our GDP. Almost 30% contribution is coming from the MSME segment. But if you look at in the areas where they are in the unorganized sector, right, and because they are in unorganized sector, they are operating. I have my own doubt. Their contribution is much more than the 30% what we are talking about. In fact, today's Indian economy, if you see, these are the backbones of Indian economy, small businesses and entrepreneurs and MSMEs particularly. So, right from money lenders, today we are talking about the fintechs. Now, fintechs are coming forward. Fintechs are also, there are less credit appraisals. There are 59-second PSB loans and all those came in picture. But digital platform or GST has brought them into, I will say, over on the border of this formal sector, they got into the formal sector. Today, we are at the position to capture their data. Then over a period, if I can say, because banking and finance for the last 45 years. So during last 50 years, the MSME also has improved. There is a lot of literacy. Earlier, literacy itself was not there about doing the business and raising the funding, the financial discipline. So on all counts, now there is a lot of improvement. People have started getting proper funding, and that is the reason today we see the mortality rate of these businesses also has reduced to great extent. That means there are a lot of success stories, and people are actually elevating from small borrower to small to micro, then mid-corp. There are many stories today we see on MSME stock exchange where people have actually grown to mid-corporate size. So there are success stories and there are problems also. But I will stop here. We can get other panels also.
Indeed. Thank you so much for that, Mr. Kharat. I'd like to bring Jinand out here. And Jinand, Online PSB Bank calls itself one of India's biggest lenders out there, one of biggest India's online lending fintech. Talk to us about this. How do you feel you have been able to really change the landscape, or so to say, when it comes to funding the MSMEs in this country?
So thanks, Ashwin. Just to say a brief about the MSME sector, right? So the MSME sector today has got, say, more than 20 lakh crore of funding already from the formal sector. Now, is that funding adequate or is there a gap? That is the first question that comes into the picture. So when we look into the gap that is already existing, the equivalent amount of funding is still required for the MSME sector. So this is what has been worked upon by the numbers that are there. Now, who has been the primary fund providers to these MSMEs? So you can talk about the public sector bank, the private sector bank, the NBFCs, and the money lenders, right? So money lenders primarily goes into a complete informal segment, which is not recorded in the bureaus of the country. So we don't know how much funding actually has gone to them. But so far as the public, private, and NBFC sector is concerned, all those is recorded and is available with the bureau records. Now, looking into out of this funding that has happened, how many of this funding or how much of this funding has actually gone to the micro and small enterprises? That goes as the second question, right? So micro and small enterprises of the entire MSME sector comprise of more than 90% of the enterprises. Now, this 90% of enterprises, how much funding they have got till now is just around 15%, right? So of the total funding that has gone to MSME sector, 90% of enterprises being micro and small enterprises, getting around 15% of the funding. That shows that majority of the formal lending that has happened in the country has gone to the medium and large enterprises or medium enterprises of the country. And that is where banks get everything that they require as normal data points available to give and lend to them. Easy to monitor, easy to collect, and NPAs are also under control. Now, then what comes is what to do about the micro and small enterprises. Now, this has been a question that has been there for decades. So this question has got some answers where there have been few platforms that have been able to crack the MSME infrastructure also. So bringing this informal sector into formal sector is what the entire industry is currently working upon. And for bringing the informal sector into formal sector, the first thing you need is data. Availability of data, and second is whether that data is authentic data or not. Say if I ask a banker that you have to lend basis this data, the first question that the banker asks, right, is whether this is authentic data or this is just any data that has come to me. So authenticity of data is the key thing for any MSME lending. Now compare a personal loan automation against a MSME loan automation. A personal loan automation shows that every month in your salary is credited in your bank account. That is enough. You have a proof you are salaried. Every month your salary is getting credited. A digital personal loan is possible. Now that's not the case for MSME. For MSME, you have multiple factors. You have a sales that is happening, a purchases that is happening, a stock that is there, whom you are selling, from whom you are buying, what is the balance in your bank, what are the cash withdrawals, what are your expenditures, so many parameters. So an MSME funding is lot more complex than a salaried class funding. And that is where the gap has always been there because none of this data was earlier available. Come 2017. So this was the year which actually changed the way MSME lending happens. 2017 GST came into picture. Now there were a lot of questions coming on GST and we know what the collections that are happening on GST today. Now all this data of sales, purchase, whom you are selling to, from whom you are purchasing. Also, this all data is available on a single platform on month-on-month basis, easy to monitor. So this data was the first change maker for automation of MSME lending. So 2018 was the year in which the 59-minute portal was launched by the Prime Minister. Now this was possible because of GST data being automated. Right. And this GST data going forward is going to change in way industry lends also, because every invoice that you are filing on GST, right, actually becomes a base on which bankers can lend. So today, if I am taking a limit-based financing from banks, right, that is an annual limit I am getting, but can I get a cash flow-based lending? I am selling every day. I am purchasing every day. Can my limit be automated every day? Now, this is what is possible going forward for MSME sector, right? But as on date, if you ask me, the transformation has happened to us a certain stage. A lot of automation around it is happening. Our core strength is MSME and we work for MSME sector day in, day out on the financing part. In every bank, including Indian Bank, SBI, HDFC, TNB, all of this, and SIDBI being the pioneer development institution, is a shareholder on our company. So this all knowledge of all the shareholders, we are combining and bringing out an infrastructure which actually helps the MSME sector. So MSME lending changed in 2017 with GST coming into picture. Along with GST, the credit bureaus went digital. The bank statement analysis went digital. The fraud registries went digital. Now, if you have so many databases going digital, right, as I told, MSME has around 10 to 12 critical data points. And if these are authentic, transparent, verified data, actually bank can disburse a loan just like a personal loan. MSME can also be dispersed. The key point that will remain on that part is also, do you have adequate risk scoring models that can work on these data points and help the bankers to lend without devising their own unique models on their own, where they require historical data of few years, which they currently all of the banks do not have. So this is an open question I'll keep right now. We'll figure out an answer to this later in the session. But that's what I have to say right now, and we'll take up more questions as we move.
Thanks, Janand. I'd like to pull Vipul in, and Vipul Sharma, you are the founder of Checkbook. You call yourself India's first neobank, and you yourself have a huge background in working with the banking giants before you founded Checkbook. How do you believe Checkbook has been able to move the needle when it comes to credit dispersal and the penetration of credit fundamentally?
Yeah, thanks, Ashwin. And I think Janand and Mr. Karat made very sort of relevant points around, the need for addressing this segment at massive scale. The fact remains that, this is a segment which contributes to about 30% plus of the GDP, has now about 10 crore people, who are running MSMEs, SMEs, small businesses, sole proprietorships, a lot of them individuals. And like Janand was saying, more than 90% of them are actually, very small micro enterprises, which are, things like shops, traders, restaurants, small fabrication setups, and so on and so forth. And that's actually the bulk, and it's only about 60 lakh companies in the country, right? So it's not, the bulk of it, about 9.5 crores, is just these smaller companies. The way we see it is that, this addressable market is, of course, extremely large, right? In fact, India's MSME customer base is, larger than the customer base of MSMEs in all of Southeast Asia put together, right? So that's, of course, the reality. So also because of that, like what Mr. Karat said, we are looking at very, very different types of customers, different types of businesses, each in their own right, a country of their own, in a way, right? Every business has their own uniqueness, etc. And the way we looked at the problem, we said, okay, there's this massive customer segment which has been underserved with money lenders, etc. And we want to actually solve not just the lending problem, but also, their access to banking, quality banking, and their access to things like insurance, which is again super underpenetrated. And one of the challenges is there are a lot of sole props or individuals who are running these shops, traders, etc., which is my main target segment. Typically customers who have a turnover less than 40 lakhs. So, they actually fall below the GST requirement. And in fact, they have, there are about 1.5 crore GST registrations in India right now. So there's obviously the majority, almost, 7.5 crore customers who don't have GST but are running businesses. These are mind-boggling numbers, So for that segment, we said, okay, most of them are actually running their businesses either on savings accounts, or they have, Jan Dhan accounts, which got opened during the Jan Dhan push that happened a couple of years ago. And they're literally running their business on that. Or they have cooperative bank accounts at best. They don't have great, current account access. And largely because, it's what I call internally, the very classic catch-22 situation, which is that a business needs credit and access to quality banking to be able to raise their turnover. But most banks in India need a turnover for them to be able to have banking and lending. So, and usually the criteria is about, 1 crore of turnover, and then you can onboard as a current account, get access to lending in banks. So we said, okay, look, we need to support this customer when he's starting out. He's a few years in his business. He's got one shop, maybe he's got a chemist shop, maybe he's got a small restaurant. And at that time, can we provide him access to a far better, for example, a current account, which we launched some time back in partnership with NSDL Payments Bank, and allows him to onboard on a completely digital journey, so that, the problem of not having a ledger of information, because the current account, like your savings account, for example, is nothing but a ledger of financial information. And correspondingly, uh, on the back of that ledger is how people like Jinan or me or Mr. Kharat can then evaluate whether he is eligible for credit and so on and so forth. So we said, okay, let's tackle the customer's problems, which are access to quality banking, where he doesn't have to, for example, spend 20 days, 40 days to open an account and spend as much as 1,000 rupees a month, just running the account, because there are fees, there's a minimum balance that they have to maintain, which is blocked money for them. Otherwise, they would pay fees again on that. And we basically removed all of those fee structures and we made a zero balance account where the customer has access, and onboarding happens in less than 10 minutes. And this is game changing for the customer to onboard on a current account that fast. And on top of that, we've of course layered lending as well on the back of again the bank statement and the information flowing into that ledger, and we also provide insurance. So I think the whole focus has been, how do you get this customer segment who's used to getting cash from a money lender, and then of course he has to repay in cash, usually at like 3 or 5% a month, and that has that whole cycle of cash continuing to move in the economy, to start trusting a banking service which allows him to onboard very fast, has excellent, works on an excellent app framework, has the right kind of technology, is relevant, is available in his own language, etc. And then give him an opportunity to obviously scale along with the business that he's running. I think the reality that we want to bring about in the country, along with of course everybody else, we all have to work together, is if you were a shopkeeper in Rome or you were a shopkeeper in Japan, right? What is the quality of services that you expect, and what is the kind of access to credit that you expect? Far, far better than what you get in India right now. Can we accelerate that progress and do it maybe in 5 years or 10 years than, taking another 30 years? And I think that really is the goal. How can you accelerate that progress?
Thank you for that lovely comprehensive outlook there, Vipul. Now, access to funding is clearly one part of the problem, but doing more with their finances and the money that they have is really the critical aspect that can really help a lot of MSMEs keep their head above the water. I want to dive into the operations part of it, and I want to, bring Mr. Kharat into the discussion. What are you suggesting to small businesses so that they can do more with their finances than what they have been doing in the past? What are some newer thinking that has been, leading in the industry now?
Basically, Ashwin, what happens is their sole business is actually running based on the finances, and that exactly is their problem. They need support of finance, and their financial support is actually coming at a very high cost. So first and foremost, when you talk about managing the finances, they are able to manage their cost of funds, because their margins are very low. And at the end of the day, what actually surplus they take home is very, very meager. And therefore, within this segment, you will see that there is no capital generation, or there is no actually surplus capital which is coming up. Whatever initial capital is kept, somehow they are trying to, safeguard it. So how do we bring the cost of funds down? So basically, they run the business mostly on the borrowed funds. And as I said, they don't have any capital. In many cases, we have seen in the banks, even their own contribution is on the borrowed funds. They will go in the market, they will get some private borrowings, and they will show as their capital. So 100% funds, when you are actually running on a borrowed funds, your cost of fund is very high. As it is for this segment, because of the risk perceptions are high, they are charged a little higher rate of interest. But country as a whole, actually there has to be some regulation, some statutory guidelines also. This MSME segment has been contributing more than 30% throughout. As I said, last 50 years data, if you take out, their contributions are high. And when they are coming into formal sector, perhaps after the capture of the data, their contribution will be seen much more than that. Despite that, we are not in a position to support them with the consistent approach. Like in agriculture, we are giving, let's say, interest subventions are there. Why not give interest subventions to MSME segment? Now, this is within the purview of the government and within the purview of the regulators, right? If the interest subvention is given, obviously their cost of fund will come down. That is the one thing. Secondly, now how do they manage their finances? Because their businesses, they are actually in a catch-20 situation. We always tell them, okay, you recover your funds or you have your receivable periods lesser, but it doesn't happen because all of them are actually operating in a very, very competitive market. The similar businesses are there, similar supplies are there, and retaining the customer is the biggest challenge for them. In such situation, they are resorting to give credit, and the credit period is actually getting elongated. If they start with 30 days, next day and next month it will escalate it to 40 days, 50 days, 100 days, 120 days. Now, sometime back when data was not getting captured through the systems, the Reserve Bank of India came out with another scheme, like suppose if data is not there, how to support them? 20% of their turnover we were taking for calculation of working capital, right? But that 20% means actually 1/5 of, let's say, their cycle, 5 times of their cycle. But if you look at their working capital cycle, that requires much more longer period. So actually, in my opinion, their working capital calculation should be also on a long-term working capital basis, right? It cannot be a working capital which is given to other segments. So when they're having a sustainable finance of a long-term nature, they will be in a position to actually save some money. What finances today are available with them are all short-term, 1 year, 2 year, 3 year, maximum 5 years. I have not seen any MSME enjoying finance, let's say even term loans for whatever setting up a business, which is more than 3 years or just less than 3 years they are required to pay. Whereas we developed infrastructure, we developed so many other industries where we gave the banking and we mean banking and finance, we gave them long-term sustainable finances. If we are looking at it from long-term sustainable finances for the MSME, perhaps they will get the breather. They will be in a position to continue their businesses properly. Now, this is where institutional support is concerned. Their own funds, how they can actually work on it. Digitization is there. A lot of funds actually they can bring in the books. Many times in business, we have seen entire sales are coming into business. Most of them get pilferage within the organization. As Vipul was saying, many times funds get diverted for other requirements, and that their livelihood requirements, not a business requirement. Bringing the discipline in the businesses that only the profits, and that also after retaining certain portion of profit in the business, certain portion of profit if they are taking out, it is it will be a long journey for them, but they will have to live with that. So a little bit of financial discipline, little support from the systems to them, and the ecosystem also should work around it, because the government of India brought one, let's say, legislation that the payment to MSME should be given within 90 days. Is it a reality? If you go and check out the data, because we used to talk to all the MSME clients, it is never happening. Nobody is actually working those laws. If they question their buyers, obviously there is some other supplier who is ready to. As I said, in a competitive market, they are facing challenges on all sides. So ecosystem also should able to understand what is their contribution, what is the value of these businesses, and how they can survive. We will be in a position to give them better situations, particularly managing their finances. That's my point.
I had a point and a maybe a sort of a question for Mr. Kharat as well. That one of the things we've seen, Mr. Kharat, is that there's a lot of education required. Because the tendency is to if they are getting a loan, and there's of course a very small percentage is getting loan from formal sector, be it NBFCs, banks, etc. But once they get a loan, maybe from NBFCs or a bank, the tendency is, okay, let me over leverage. I'm getting a loan, let me get a loan from 3 or 5 people. And, one of the things we realized as we started lending, and even in banks, an SDFC Bank, IndusInd Bank, etc., where I worked, where we saw that, okay, if the customer has multiple loans in a short duration, that customer usually ends up being over leveraged, and then he obviously has problems in repaying. So a lot of this is also related to education. The points that you were saying, that okay, formalize your banking. Don't treat because for a lot of these shopkeepers, for example, there is a very thin line between personal and professional, personal and business expense, right? It's all going from the same account. So, do you think that will help? So, basically, or do you think that there will be a segment of customers who will continue to over leverage, who don't understand, some of these business fundamentals? Because I have a fundamental belief that the dukandar of this country, or the MSME owner of this country is most of them are savvy enough to see opportunities, but they sometimes go wrong in understanding how long it will take for them to grow, and in that impatience they end up over leveraging.
The segment which we are discussing today, this segment is always in need of cash, and that need of funding, I will say. And these funds are required not only for the business purpose, but these funds are also required for various needs on the family front, various needs for the livelihood. And then because of the illiteracy, or because of the indiscipline, I can say, in managing the finances, most of the time the funds gets diverted to other needs, which are pressing needs, I can say, for their survival or for their livelihood. And many a times the borrowers, they do not understand the difference between the turnover and the profit. So the moment they get the turnover, they feel, okay, this is the cash flow which is available for them for spending, and therefore they do not actually save any money out of it day to day basis. So needs are enormous and funds are very limited. In that dichotomy, in fact, they are on day to day basis they are operating, and that is the main reason. But nowadays, as I was explaining, there are certain NGOs, like I am also a mentor to one NGO called Bharati Shakti Trust, BYST, which is actually operating from Delhi. What they do is actually they do mentoring and handholding for these small borrowers. They give them a lot of financial literacy programs. Also, they undertake. They discipline them on the financial management. They see that their money is not diverted. They see that they get a proper mentoring also from somebody who knows that kind of business. So they create, behind one entrepreneur, they create some kind of support system. With that, what we have seen, their failure rate is actually less than 2% today, and almost 99% of them are not only survived, but they have upgraded. I have seen quite a few cases which are actually upgrading from 50,000 finance to even 5 lakhs, 50 lakhs. One case, when I funded through that NGO only, we had financed him 50,000 rupees for repair shop in the cycle. Today, he is having a retrading where he is enjoying a 50 lakh rupees working capital limit. So that kind of upgradation is possible when we are actually having a proper advisory or proper mentoring system which is backing them, which is lacking. If all of us can create that, I think perhaps it is possible. It's a huge task, a Herculean task, I will say, considering the volume of small businesses which are operating across the country.
Right.
But yes, it is possible. Bankers also do a lot of do take a lot of efforts to educate them. But then, as I said, volume is quite high to handle all of them together.
Right.
Lovely, lovely. Thank you for that, Mr. Karat. I'm going to take 10 more minutes of your time. I know that I have overshot the calendar blocks that I had sent across for you. Two quick questions, and I want to really bring in Jinand on this one. BNPL, buy now, pay later. Your first thoughts about this, the potential and the challenges that you foresee. Generally, your overall first thoughts when it comes to BNPL.
So BNPL is a product which has been talked about a lot. This has been product which has been more successful on the personal segment in buying consumer goods as the first use case that has come up in the industry in India. Globally also, we are seeing BNPL more used in that segment where there are retail customers. Now, looking into BNPL success, how successful they are, you need a cycle to actually understand whether this credit limits that have been given, right, to pay later, right, without any interest today, how successful they are. So my first reaction is it's a good thing for increasing the consumer offtake and consumer buying. But success of this BNPL project across India is something that has to be looked into deeper over a period of 3 to 5 years. Moving into MSME sector, whether BNPL will work really good in the MSME sector, it is something that will come up for buying goods. It will be something that will come up for buying equipments, but the values are higher. So the structure of BNPL for MSME sector is still a question mark. For retail sector, definitely it is something that has come up. There are a lot of players that have started offering BNPL. Success of BNPL requires at least 3 to 5 years of cycle to be completed. Only then you can say how successful those players are. So for Indian market, huge market to be untapped, but whether BNPL is the product that will be able to cover it up, or there will be innovative products other than BNPL also that will come up from the industry, that is something that we have to see into. So that's my take on BNPL.
Thanks, Jinad. Vipul, what are your thoughts on BNPL?
Look, I think, the overall lending gap in India is, for MSMEs is like $1 trillion, everybody there are numerous reports which talk about that. Out of that, BNPL is, of course, on the consumer side. Even for example, I bought, for example, shoes from a store in Bombay, online, and I was able to pay for it through a BNPL product. So obviously for the store, it means that they can increase their volumes because customers who may not want to pay, let's say, a bigger amount for a shoe can actually break it up into 3 parts and pay it and still get to get the product that they want. And interestingly, shoes are a huge industry in India. And there is a lot of opportunity, not just in that industry, but in many others. So for the retailer, it makes a lot of sense. But then for the lender and for and of course for the customer, it makes a lot of sense as well. But a lot of BNPL, and I think, the regulators have also come back and said, hey, look, you have to report BNPL to the bureau. And I think that's the right approach. How do you is it sort of a cardless credit card in a way, which is being given? And you're able to break it into 3 or 4 parts and pay those amounts and then go ahead and repay them in 4 installments. I think those are great innovations. The BNPL overall piece is expected to be somewhere in the range of about $50 to $75 billion, over the next couple of years in India. So out of the trillion, it's still less than 10%. So it's definitely going to be a use case. It's fast moving. It's on the internet. And for a lot of businesses, which in the next 10 years will be on the internet in many different form factors, credit will also be in many different form factors. So I think BNPL is one of those form factors. You'll have business loans, you'll have overdraft, you'll have supply chain credit, credit cards. UPI and credit is another exciting paradigm that's coming in. How does that sort of translate into even things like, I can hold your money or set rules around money. The whole concept of, for example, digital currency coming in, and we are one of the few countries which have actually launched it. We're walking the talk on it. And I think it's wonderful what RBI has done with it. But I think the use cases will evolve. Can I understand what your money inflow is and at the right time block it and take it, or use it only for certain sections? All that starts getting enabled through technology. So I think the next 10 years is going to see a massive explosion in the type of form factors and different varieties of risk that each form factor will bring. And like Jinan said, we'll have, the 5-year data as time goes in, and some of them will perform better than the others. And obviously the pricing will modify itself, not just on the product side, but I think also on the on the customer segment side. So if you have high bureau score customers, they probably have better pricing, just like how it is in lending as well. So definitely bright future for form factors. The use of technology allows people to now start doing really small loans. But I think on the collection side, there has to be a lot more. I think technology evolution, because unfortunately, collection is still a fairly manual, hard business. And I think the utopian view is that digital currency kind of solves a lot of that. But it remains to see again. I have very few doubts about the fact that it will happen and that this $1 trillion gap will get met, and that we will have one of the best ecosystems of credit, banking, and insurance in the world, just like we've done it in UPI. The main question is how fast can we accelerate the time frame? Is going to take 5 years, going to take 20 years. I don't think it's going to be beyond 20 years, but can we accelerate to, let's say, 5 years or get it done in 10 years? And that just helps the economy and that helps the country.
True. And digital currencies are like seriously unlocking opportunities. And I'm excited to see the innovation that is going to come about. I want to really wrap up our chat by asking you about your wish list from the upcoming budget. What do you hope that the finance minister will discuss, come the big union budget day? Mr. Karat?
My wish list, I have this one item which I already explained, is about interest subvention for the MSMEs. If government is able to support the interest subventions, I think most of them will have their cost of fund getting reduced, and they will have better financials for that, for their businesses.
Thank you so much, Mr. Karat. Vipul?
I think the subvention side and being essentially allowing MSMEs to get the benefits, so that they are able to obviously reduce their cost of capital. I think some of the other ones could be related to how, for example, Udyam Aadhar or Udyog Aadhar and all these things can get expanded to a wider variety, and there can be some kind of a, for example, an Aadhar-based verification of some of those things. A PAN and Aadhar verification-based ecosystem can get created. One of the interesting things, for example, I saw in the UAE is that apart not only the GST but the company registration and the income tax registration ecosystems are also open for companies to consume data from, that they can actually make decisions far faster. So, if something like that happens, that would also be an interesting way to sort of accumulate data. And of course, it immediately helps Jinan a lot, because, it's got a lot of these GST sort of data consumption engines, which really work well. But I think for everybody, it does help. I think the last one would be how can sort of account aggregator as an ecosystem really accelerate much faster than what it is right now. I think that's a good, wonderful piece of technology as well. And it would be good to see that scaling fast.
Thanks, Vipul. And Jinan, your closing thoughts on what you wish for from the union budget.
So one thing that I always feel for the MSMEs is that the cash flow based lending is the future for MSMEs, and to help cash flow based financing or that sachet loan financing, you need to have a credit guarantee extended to that. So we have credit guarantee trusts that are giving guarantees for term loans and working capital, right? But these are not extended to cash flow based financing, which is the future and which will help you to reach to the last mile of MSMEs. The key point that was said is, can we reduce the cost of financing to MSMEs? Now, this is possible if there is a credit guarantee associated to a cash flow based financing product also. So that is one wish list that we definitely look into. The second one that we look into is that the formalization of the informal segment. So while you look into Udyam registrations, 1 crore MSMEs have Udyam registrations. Now, if you look into 7, 8, 9 crore of MSME, we don't know the exact number that is there. Building a process in which the informal segment can also get an Udyam registration. This is something that is expected. We do wish it has to happen very quickly in 2023. If that comes up, that will be a major boost for MSME sector. And the third point, which is the most critical today in cash flow based financing, is the KYC for MSMEs. The easier the KYC for MSME, just like a retail person, if you can do KYC digitally, there are a lot of open points for KYC of MSMEs. If that can be made normalized, or that can be made better, I think the regulator is already looking into it. And if you get the data for doing an eKYC real time for an MSME, that serves the problem of the last point that is pending for an MSME getting a digital cash flow based financing loan from the best of the lenders of the country. So if these three things are done in 2023, trust me, by 2025, every MSME would be getting financing on their app without going to a bank or without going to a branch. So that's all from us.
Lovely. Thank you so much for your thoughts there, Jinan. Well, it's been a lovely afternoon talking to all of you. Mr. Kharath, Vipul, Jinan, thank you for joining us here on the MSME Exchange on Business Insider India, and really helping us with a deeper understanding of financing in the MSME space. I wish you all the very best, and I look forward to having you join us back on Business Insider India. Thank you.